Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
Hi everybody, my name's George FX, or GFX for short. I'll be taking over for the week as RP Forex is on vacation in Miami, which is really cool. Hope you're having a relaxing time out there, and send us some photos when you get a chance, RP. Much appreciated. So I'm here to kind of give you guys a little bit of something different for the week. This is going to be kind of a special thing. I'm not really going to give you any kind of signals or alerts. Mainly, I'm here to focus on some theory, some educational tenets that are going to hopefully let you prevail in your trading experience. One of the main things that drive our trading intent is definitely price. We're always looking for good entries. We're looking for the right time as well to enter in on trades, and the correlations that are happening constantly, day to day, hour to hour, minute to minute, year to year are very significant to note. You can't just base everything off of signals. You can't just base everything off of price action or fundamentals alone. There's quite a bit of things that are working here. Now, one thing that I know a lot of people do ignore is time. Time seems to be a principle that, although it's there on our charts. We look at it every day. We stare at the prices, we stare at the pips, but we're not really focusing on the time. And I'll give you guys a few hints on how you can really start to see your trades pan out and how you can block in certain zones and areas so that time can become your friend and you're not just trading price. So before I get started on that, I'm just going to give you guys some recaps from what's happened this morning, what's happened over the weekend in the land of Forex. One thing that that I'd like to point your attention to is, let me just pull up a couple of things here. So let's open up the news here. Alrighty. So one of the things that happened that was kind of significant, and I don't know if anyone noticed this, but the European Central Bank president spoke and released an interesting statement. I thought this was very, very appealing. I thought it had a lot of depth. If you ever want to read anything like that, you can always find the latest release on something like Forex Factory. There's a lot of different areas. What I usually do is I pop open that release and I start to look for some hints into what's hawkish, what's dovish, what's really going to give us an insight or a sentiment into how this release went. So NRP goes over this all the time, and I think that it's good to keep up with that. You'll notice that Euro has started to retrace a little bit. There's a double bottom formed on the daily charts, and you'll see that there's some pretty decent movement going up. I actually made a clear, nice empty chart for you guys. I'm going to show you guys a couple of things here. But this, there's some explanations with this candlestick. There's explanations on why this is happening. You'll see your two main areas of bouncing off, creating a double bottom here. That's one thing that's telling me that there's something might happen, and we were waiting for this release. We're waiting for some sort of guidance or action from the European Central Bank and the European Union, showing coalition and that they're going to be working together. That's basically the what we're reading here is there is a stronger sentiment for the European system in general. I believe one of the first notes that the comparison was made that from a low of 62% approval rating to a 76% approval rating today, that speaks that's a quite a big jump. Uh, I don't really see any reason uh, why euro is not going to be instrumental in the next coming few weeks. So actually one tidbit here that I'd like to draw your attention to, if you kind of scroll down through this statement, there's the shaping the future of money, and this is kind of exciting for all you crypto heads out there. If you read through this, you kind of notice that looking ahead, the European Central Bank will continue to act as a catalyst for change. We'll go on engaging with European stakeholders to actively continue to a pan-European payment solution. Well, what does that mean? Uh, you know, a central bank digital currency, right, would allow citizens to use central bank money directly in their daily transactions. And you've heard a little bit of news about this before coming from Germany, where and France, the military of France has adopted something called Tezos into their structure, and the German banks are considering to now to start selling Bitcoin as a product. And what that means is that the banks are going to have to buy Bitcoin in order to sell it. So that's actually kind of interesting. So we'll see how that plays out, but something to note. You get a little bit of hawkish, you get a little bit of dovish. One thing to keep in mind that was laid out here is that there is some I guess rising interest in the digital currency world, but that we're seeing growth, weak growth. However, employment rates are still hanging on. So like there's a bit of a good with a bad here, right? So just kind of keep in mind when you're reading these press releases that it's never really just one way unless you're getting some solid numbers, but you do have to do a little bit of analysis. Um, so one thing I've done here, what I'm doing here is I've been setting up a little bit of a tutorial for you guys on how to read time and price. And one thing I noticed, if you're using TradingView, you get to you you get your volume levels at the bottom here, but you want to get those volume on price levels. So just jump up into indicators here and you get volume profile. Okay, you get the three choices here: fixed range, session volume, visible range. Fixed range should give you, that's where you set your own point. So you can say, oh, well, I only want it from here to here, right? Session volume is a little bit different. I think that's the one that I think we're going to be doing. Visible range. That's the one that I like to use, because then what you do is as you zoom in and zoom out, your volume levels are going to reload on the screen for you, right? So let me just erase this here. Alrighty, so let's jump into this. So I'm not going to be calling any prices here. Of course, we did see the double bottom. We had some decent sentiment come out of the European central banks. I'm personally thinking, that this is going to trend up just a little bit further. We're seeing some good volume here. Now, I do most of my trading is done with naked price action. However, I am a huge fan of indicators. I love to spot trends and understand that you need to use different indicators depending on the different types of trends, right? So, I mean, we have our before you can even do that, how do you even know what the trend is? How do you spot the trend? Yes, there's an indicator for that. Yes, you can do strategy testing. you can figure out what's trending and what's not trending. But let's fall back a few steps behind, and I'm going to go ahead on the daily chart here. I'm going to zoom all the way out. I'm going to look at time. The first thing I want to draw your attention to is that, in order to find what the primary trend is, you can't be zoomed in. You can't be looking at like the past few months. You got to go to at least 9 months, a year to 2 years out to figure out what that is, right? So I'm gonna make sure that let's see here. We go to 2018, 2017. So I'm gonna draw a little marker for myself here with a vertical line at 2017, just to give you guys just a nice quick line. Nothing crazy. I'm doing this just so that I can have a visual reference for when I zoom this in, and then I can stop at that point, right? So I can give myself a nice little, right? I can pull that back, and here we go. So now I have exactly 2 years behind me, right? So let's zoom that in a little bit and pull it back, and here we go. So what I just did was I laid out the volume on price profile. So the volume profile on the right hand side here, you can see levels where the price, if price stays in a certain area and consolidates in a certain area, you're gonna see the volume up and the volume down button bars here. So actually, if I go to the settings, let's actually volume up area. So let's change that. You don't have to have these settings, but I like to try and replicate up and down with green and red. Just makes things a little bit easier for me to see, to read. So alrighty. So we're going to establish what the primary trend is here. And this is, of course, Dow theory, Martin Pring, right? So if you're reading any technical analysis books, highly recommend Technical Analysis Explained by Martin J. Pring. I think it's the 5th edition now. And of course, I'm kind of basing a lot of this on the actual theories applied in the technical analysis books. I'll give you a bit of a background on what it is that I do, who I am, so you guys have an idea. So so my name's George. I studied at the University of Toronto. I have a financial trading certificate in options and strategies. So I a graduate. I'm currently pursuing my Canadian securities exam. So I'm studying for this, and of course, just trying to get the credentials in order to become more qualified and actually, make better judgments for value investing, as well as short-term intraday swing and of course value trading. So actually, while I was talking here, I realized that I zoomed out a little bit too much. I had January 17. I made lines at January 18 and January 19, so we can kind of see the overall what's going on here. So we're looking at if we're looking for the primary trend, 2 years seems like it's a little far back, but it's still going to give us quite a bit of breadth analysis here. So I'm actually, I kind of go over and I try and match these lines here. So we hit the highest highs of whenever, just to plot that, you find the highest highs and the lowest highs, right? So this is the highest high. We go down and we find the lowest high. So here it is. So we have our high HH and our LH, right? Highest high, lowest high. So we want to plot that out, and I like to stretch it out just a little bit further so you can kind of see it in the future later down the road. So we want to do the same thing, and remember, we're looking for a primary trend. So now we're going to do our highest low and lowest low. So we're going to repeat the exact same thing, and don't worry about if you don't get a perfect channel or anything, don't worry about that. If your lines are cutting through other lines, that's fine. These aren't trend lines. These are more so relative to the highest highs and highest lows and the lowest lows. So you see how we're cutting through all of these. This here is, for now, it's just background noise for this type of analysis. So so now that we have this, and I always like to make sure that they stick nicely. Okay, here we go. So we have our volume on price, we have our highest highs, highest lows, and our lowest highs and lowest lows. Now, one thing that I'd like to do as well when doing this is if you double click on the trend line, you get a couple of options here. Okay, so always show stats, I like to enable that, and show price range, right? And this, I'll show you why that helps. What it does is it actually sticks the price range to the side here, so you can actually, when you click on those lines, you'll be able to see what that high was, you'll be able to see what that low was, and it'll give you a better insight when you're zoomed into the chart, so you don't have to zoom out and constantly look back and forth. You have a nice quick view at seeing where those levels are. Now this is where having this point here go out further into the future, I like to do that. I still like to have it out into the future. It's a projection. This is a projector. There's no saying that the price is going in this direction or that it's going to be here. It's ever going to hit this level. But it's nice to have that projection. So the next thing what I would do is I would just drop horizontal lines. So I'm going to drop a horizontal line right at the top here, another horizontal line right at the bottom here, and it's just going to give us a nice range to understand what. So this is the highest high in the past. This is the major trend highest high, right? Now we could do this one for the beginning of January 19. I recommend that. I recommend looking at. This might be going a little bit too far back because we're dealing with a currency. I still like to see that picture. I like to see that overall picture even from the year before. So doing this type of thing with every single year is it's quite fundamental for your own understanding. You want to go back in time and analyze these things. Like you don't want to just be stuck in a 3-month range all the time or a week range or an hour chart. If you really want to understand how price works, how time and price works, you want to go back in time and you want to start looking at the historical patterns, historical values, right? So I'm going to go ahead and why not? Let's get the overall trend from January 17 to 18, right? So we're gonna do that same kind of technique. So lowest high, highest high, and just plot it up here. Alrighty, and we'll get that plotted here, and we'll do the same thing over here with the lowest lows and highest lows. Alrighty. And let's get that to stick. All right, so now we have a idea, and then of course it's a little bit more. You see the for 2016 here we have more of a consolidated area, right? Where it seems like it's been bouncing back and forth. Like this is going in major directions, but over here we're going very sideways, right? And there's different, this is actually something to note. So whatever your level of experience is, if I don't know if you're trading with indicators or not, if you're just trading with price action or anything like that, that's fine too. But everyone can agree that if depending on the type of direction that the market is moving, if the market is going sideways, you're gonna want to use a different set of indicators than if the market is either trending up or if the market is trending down, right? So like for example, in this range here, if I'm if I'm doing any sort of value investing for if I'm buying euros, if I want to hold euros or hold USD for the year, and I don't know which one I'm gonna be in. Let's say you're a corporation, you have 50 grand, and you don't know, am I going to hold my money with in euros or am I going to hold it in USD, right? You got to make a decision. So you're going to want to look at this price trend first, figure out if you're trending or non-trending, right? So that's one key thing that some takeaways from that would be that you have your trending indicators and you have your non-trending indicators, right? So although this is we're looking at a year overview, we're still getting an idea of the trends. So let me just plot these ones here, and the lowest lows. Here we go. All right. This is more so. I mean, it's got a bit of a downtrend, but it's also we're also looking at. Oh, why did I do that? There we go. So the highest high, lowest low. There we go. Not as significant as these guys here, right? Like especially this one here, and this one here. But overall, at least you can see what that looks like per year, right? And let's do a projection, right? So you don't want to stop there. What about 2020, right? So we have only this much left until 2020, right? And then you want to probably set yourself up for 2021, because we like to plan, we like to look into the future, and we also like to look in the past. So so we look in the past just as much as we look into the future, right? So I'm going to zoom in here. So we've set up our volume. We've analyzed our major trend. Obviously, is going down. But now we want to take a look at ways that we can see any support and resistance levels in this major trend, right? I'm not going to go back that far here. So let's get back to our year. So for the current year, and I think having levels from here might help out, but not yet. Okay, we'll get to that probably later on this week, how we can also use some more historical data. But I'm going to go ahead and zoom this in for you. Okay, so what do we want to do here? Let's level this up. Alrighty. So looks pretty messy, lots of lines, lots of volume stuff, and I love it when people are critique having messy charts. Everyone's a little bit different. I like to see as much data as possible. I am a developer, so I code a lot, I analyze a lot. So for me, data is key. Although, don't get me wrong, naked price action is a beautiful thing, and sometimes it's nice to just be able to look at a chart and say, hey, I see a double bottom. We got some good sentiment. That's probably a good strong indicator. But nevertheless, going back into the tenets of the Dow theory, we've identified our primary trend is down, right? We've identified our highest highs, our highest lows, right? So highest highs and lowest highs, right? So we have the and I guess HH and LH, and then we have HL, highest low, and then LL, lowest low, right? So now we know where that's ranging. So you can actually see the respect that the respect that these lines are going to have going into the future today. Tomorrow, we'll see a respect given to this, especially because it's a strong trend for the year. If you see anything pop up above this, which we see that all the time, or below, like over here, right, from the lowest low here or highest low, like things like this tend to consolidate back into that major trend that we have, right? So if we're looking at, if you're looking at the year, if we see any major movements hold and stay there for a longer period, they say 3% rule, especially when looking at longer time frames. It's good to look at a 3% rule. And how that works would be that you either want to wait 2 days. So if you wait 2 days to confirm that something is, uh, if something is staying in that zone, or 3%, right? So you just do a calculation on whatever the 3% is, and that's your confirmation that that at least price will stay stay there for a while, right? So anything like if we go back in time here and look at when those zones uh, were changed, or when those zones were broken. So like over here, we've had the zone broken. We had 1, 2, 3, 4, 5, 6, 7 for 7 days. For an entire week, we were outside of the trend, but consolidated back in. Um, I guess it really depends. I think the 3% is more applied for the stock world, and for something that's more logarithmic, right? So where you have major moves, but with currency is just a little bit different. So you have to keep an eye out. I would still, especially if you're trading on the daily charts, if you're not intraday, then that 3% rule is generally fairly accurate. Um, so let's head back. Let's head back in here. So let me think about this for a second. Okay, yeah. So we want to we've identified our primary trend. Let's do the secondary trend, right? So secondary trend is lasts about 4 weeks to 3 months, right? So as opposed to the primary, which is 9 months to up to a year, 2 years, right? So we've got our work cut out here for us. Um, let's go into the secondary trend. So we want 3 months. So let's give ourselves another vertical line. Hop over from pink. Okay, so I like to make sure that I color code differently for the different time frames, right? So whatever it is, whatever color codes you use, put them on a sticky note on your monitor and have that there all the time, right? That way, I'm just used to it by now, but that way you can have a nice visual indicator for the different trends in your areas, right? So let's go to 3 months. So I'm gonna hop back here. Let's zoom in. December, November, October. So we're just gonna look at October here and forward. Nothing more, nothing less. There's no point really, because this is a secondary trend. We really don't care about previous price history right now. We just want to evaluate and see what it has happened in basically the previous quarter. We're not looking at corporate financial records or anything, but we're just looking at the previous 3-month range. So here we go. What do we identify here? Pretty flat, right? We've got our highest highs are up here. Our lowest lows are up here, but there's something breaking through here that might give us a bit of a hint as to potential, maybe potential reversals, but we will see. So let's draw that orange for us. Okay, so secondary, we'll drop it. So as you could see, we have our lowest low here formed right on our 3-month level, right? So we're gonna take the lowest low here, highest low here, and also project, right? So I like to project that, and you'll see why this all makes kind of sense later on. Oh, here we go. There we go. Alrighty, so we have our lowest low here and highest low here, and guess what? Our highest high and highest low are pretty much already hit with the major trend. So we can kind of already get a nice visual overview for, I personally wouldn't even draw that line in the other trend because it's kind of like this is an active candle first of all, so there's no point, right? But we can see we can see how things are playing out here, right? Alrighty, so we've got our primary trend, we've got our secondary trend. So some tidbits for you. The primary trend is called a tide, right? It works just like it's like ripples in the it's like the ocean, right? So we have our primary trend, which is the tide. It really tells you about, the whole flow of the ocean, right? Then once we get into our secondary trends, and secondary trends are going to be these 3-month blocks, and I recommend you plot your secondary trends as far back in time as you have patience for, so you can get into the spirit of understanding the secondary trends, which are called waves, right? So here's our tide, right? Our tide's going down, and then we have these waves inside our tides, right? So here's a wave going up, but the previous wave before that, well, guess what it was doing? Well, let's find out. Let's draw that vertical line. We're going to go 3 months back. So let's go September and July. So we're going to drop that here. Oh, come on. Sometimes this stuff doesn't stick. All right, so 1, 2, 3, July. All right. Oh, let's look at this wave here. It's actually falling in line with our primary trend. I'm not even gonna. Actually, I should draw it just for the visual, and it's good practice. If you're not, uh, whoops, practice is a good thing to do. So we can see that we're going to do our highest highs, lowest lows. So here we go. It pretty much falls on the same, but we could see that our wave here is going down. Our wave here is going sideways. Actually, that's an important one because got to look at markets when they're sideways. 1, 2, 3. So we'll plot that back. There we go. And look at this. Highest high of this range here was right there. Oh, and goes up like that, right? And then we redo that for the lowest lows. And there we go. And then let's get the next cycle in here. So the cycles, these are cycles. So we have our primary cycle. We base that off of a 1 year. Our secondary cycle is based off of a 3-month. And we'll get into the minor cycle, which is like the ripple, right? And that's what's gonna, that's more for the intraday traders. Now, you don't, if you want to apply this type of analysis on intraday trading, that's totally fine. Just change your ratios on the cycles. So if my ratio here is 1 year, a 1 year cycle to identify a primary trend, then you might be looking at an hour's worth cycle for your primary trend, right? That depending on the frequency of your trading and how long you want to hold the trade for, right? Alrighty, so let's get back into this. So I've explained to you the primary trend, I've explained to you the secondary trends, right? And we'll get into the ripples, but I just want to analyze this for a second. Let's pop that open. Alrighty, let's see what's going on here. So the highest high of this cycle would be here, and the lowest high of this cycle would be there. Oh, there we go. There it is, right? So the lowest high and the highest high. Highest low. Oh, actually, highest low is up there. I'm going to redraw that. Lowest low. Highest low is up here. Alrighty, nice. Looks pretty messy, doesn't it? That's okay. This is stuff we're going to ignore, but we can see that within our primary trend, and I'm going to have to do the whole year so you guys can actually see how it works. But within our primary downtrend, we've had uptrends, we've had downtrends, and look, we're also seeing some more uptrends, right? So it actually does break down into real waves, right? So our tide is going this way, and then our waves, right, are waving around. Pretty cool way to think about it. it is if you're interested in learning more about how the waves work and how tides, waves, and ripples work, do look into Dow theory. It'll open up your mind and how you can consolidate all this information together as well. I'm just going to give you the real basics. Alrighty, so that's a 1 year period. So when we started off the year, right, we were peaking, we were flying high, we were doing well, and then everyone's probably thinking, oh, this is great, like euro's gonna, it's shooting up. But then we found ourselves in this wave. We got stuck in this wave where things trended down. We went a little bit sideways throughout the second quarter. Then we went down in the third quarter, and we're kind of going back up in the fourth quarter, right? And I like to think about these things in terms of quarters because of business cycles. Now, currencies don't really pay that much attention to business cycles. However, it's still important to think in terms of those cycles because as a trader, as an investor, these are good practices to have when you're applying your analysis. Especially for things like manufacturing index, non-farm payroll, right? These are all quarterly events. These are monthly events, but they're all based on earnings reports. The decisions that happen in the corporate world are highly affecting things, the currency pairs, right? So you always have to keep in mind. So now we've identified all our secondary trends, and I was just drawing those for you so I could talk. Not really, but like I said, our tide is going down. Our waves were going down, up, right? So we can kind of see a pattern emerging there, right? And just by doing these types of things, open up a naked chart and start plotting the time levels with these vertical lines going in cycles, right? And remember, you want to start macro and go micro, right? So you start from the outside and go in, right? And it's really going to open up your mind. Yes, we could draw the support resistance everywhere. We can draw all the main levels. There's different ways of approaching this, but if you really want to understand a currency pair, you want to understand what those cycles look like, right? And of course, we just keep drilling in. So now we're going to take a look at this past 3 months here, and I'm going to literally go only until October. And let's zoom right in. Here we go. So at this point, in the anything that's a minor trend, so we have our A, B's, and C's. Our A is the primary trend, our B is the secondary trend, and our C is the minor trend. Anything within those minor trend zones is pretty much noise if you're looking at this from a value investing point of view, if you're looking at this from a macro level. But if you want to really get into the micro trends, I recommend that at this point you stop and change your colors, lock these in. So you want to make sure that these guys are not editable, right? And you just go lock, right? So you want to just lock everything in. And this way, when you're messing around with your chart, when you're adding new levels, it's easy to move this stuff around, and it gets really frustrating if you're not doing that, right? So we just want to make sure that everything gets locked in, right? Switch up your colors. All right, so here we go. The past 3 months, we've had several analysis that I can do here. We've got this M, which is the double top. We've got this W, which is a double bottom. Every time you have a double top, that second top is especially if it passes this zone here, it's gonna slide down. Same with this double bottom here. we see it all the time. It's a cycle. These are just different. These are just representations of cycles, right? Your double top indicates that, if this was to surpass that, the double top is gone, right? Even if it's not always 100% accurate, but for the most part, your cycles are gonna repeat themselves, right? You're gonna find yourself in situations where uh, everything is cyclical. History and price and volume, not volume, but history and price will repeat themselves for sure, right? Um, Alrighty, so we've gone over the primary trend, the secondary trend, and the minor trend is a little bit more harder to deal with. What I like to do, the reason I like to lock things in is I'm gonna switch out from the daily. Like, yeah, we could go into a more refined view. So minor trend is anything under 4 weeks, like even less than 4 weeks. Let's go with like 2 to 3 weeks. Let's zoom in, right? So let's give ourselves like maybe about that much room. That's a little bit too much. And 3 weeks. Let's just under anything under 4 weeks, because once you get into 4 weeks, you're dealing with a secondary. So here we go. We're pretty flat around here, right? So grab the highest high. Oh, don't forget to change that color, right? So this one is I'm gonna go in green or yellow, something that I'm really gonna see, um, because these are the guys that we're gonna be dealing with if we're trading intraday or scalping or anything like that, right? So we get our oh yeah, highest low. Whoops, I almost messed that up. Come on. So this because of our cycle, because of our period. Come on, why can't I grab that? Oh, I must have this locked. There we go. Because of our cycle, because of our period. Here we go. High is high. So we're not looking at anything before that. Okay, that's why we're breaking these down into different colors, different levels. So now we have this is the minor trend, right? So of course also trending down, going with the primary. Now secondary trend is going up, right? Minor trend is going down. Keep that in mind. What did I do here? What did I do here? Low, yeah, highest low, lowest low. Here we go. My apologies for that. Sometimes when I talk too much, I don't see the candles. Here we go. All right. So you can see things setting up here. Now, what am I ready for? Now I'm ready to analyze this thing even deeper. Micro. This was our macro analysis, right? So we see what's going on for the year, right? For the past few years, we draw our waves. We draw our tides, right? Tide, tide, tide. Then we draw our waves, right? And we go wave, 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 and then we draw our ripples, and we've got these ripples. Like I said, 3 week span will give you a nice ripple, right? 3 weeks at it, you get a few of those within a 3 month. Anything under 4. So here's our ripple going down. Here's our ripple going up, right? So actually, just so you guys get an idea of why it's important to look at these uh, cycles. So the 3 weeks, here we go. Yeah, that's a 3 week period. So our lowest low and our highest low right there, and then our lowest high and highest high right there, right? There we go. So that's for that period there. And things are getting a little messy, things are getting complicated, but that's okay, because we can see through the noise. We can always open up if you have split screens, you can that's why you have several charts, several monitors for your trading, right? So you can have nice detailed analysis. Like I've got a naked Euro USD chart to my left here that I'm staring at right now as well. So as I'm doing this, I can still keep an eye on the other hourlies, on the time frames, and that is giving me the insight I need. for any day trades I have happening, or any positions that I'm holding. So, all right, so remember the blue one here, that's our tide. The orange ones here, those are our waves, and the yellow ones in here are our ripples. And you see how that's starting to come together? If we were to do this going back for every one of these cycles with the ripples as well, we would get a really good indication of what price action really looks like in this whole chart, right? Like, you really can't mistake it. Uh, some people get really good at this and they can just do this without drawing any lines. I still like to draw the lines. I still like to do the practice. It never hurts, and it makes you a better trader to do stuff like this, right? Um, historical analysis. So here we go. Now this is an active candle, but there is a wick, so I am using it here. If that wick goes away, then we're probably gonna, well, we're gonna follow it, but we can use that as a tenant here. We can use the previous lowest high as the tenant here, just until this day closes, right? But at least we can see how this works. The next thing you want to do, what do you want to do next? You want to look at these wicks. You want to look at the candles, right? Now we've done our analysis, we've done our trend identifiers. We figured out our tides, we figured out our waves and our ripples. Now we look at these candlesticks. Let's see here. Anatomy of a candlestick, you guys probably know all that stuff. Why don't we just leave it with that? Why don't we leave you with the trend? We have our volume profile. We can see where prices like to be, right? We can see where prices like to stay. So where prices don't like to stay, especially in the short in term like this. Like you can see that price, like right here, we don't have that much volume on price. Well, you could see that price is constantly just skipping right past that point, right? It's just going whoop, right through it. So we can identify that, if there is going to be a range of trading, like what happened here. This candle formed. It opened here. It started to go down. It saw some support, right? And of course, that's that double bottom pattern you're seeing here. It saw some support, and it was like, all right, well, sorry bears, but bulls are going to take over this. We're going to skip right past all these price zones and just jump right up here because price likes to sit in this area, right? So keep an eye open on that volume price bar. It's going to help you out a lot, especially if you're once you figure out a nice entry, once you see that, then you're going to be able to also figure out, well, where am I going to exit? Where am I going to place my stop loss? Is it going to be outside this volume price bar? Probably, right? But then you also get these, these areas here. If you look back in the history, you're going to definitely want to place them above all these wicks, right? So, a good stop loss for that would have been here. You would have bought here. You would have taken your profit probably around here, right? Just where that price is, and that's a good 60 pips or so in your favor. Yeah, so tomorrow I will have another lesson where I'm going to dive a little bit deeper. So now that you guys can identify your primary trend, your secondary trend, and your minor trend, we're going to go into some more candlestick analysis, and we're going to go micro. We're going to stop looking at the day. We're going to look at the 4-hour. We're going to look at the 1-hour, and we're going to even look at the 15-minute. And I'll show you guys how to set up your pivot points, how to do all that cool stuff, and find your entries for intraday, for scalping. It's going to be a lot of fun. RP's on vacation. We've got a bunch of different news coming up. What do we got? Let me see here. Let me look at my notes. Okay, ADP, non-farm payroll. That's the corporate earnings. That's the corporate one. It's really important. I love corporate earnings. I love stocks. I love value investing. I love all that good stuff. Make sure to love it yourself too, because it's going to help you with your currency analysis as well. Look at that GDP quarter over quarter for AUD coming up tomorrow. you're an AUD trader, you're gonna like that. Actually, if you guys are looking at any of the daily events, NZD is really pushing up today, so you want to keep an eye on NZD. Been a pretty good buy, especially the NZD Euro pair has been a strong buy. And if you wanted to look at it the other way around, then CAD has been suffering a little bit, which is uh, I hate to say it, but it's been happening for quite a long time. What else? What else we got here? GBP NZD's been kind of taking a hit. Uh, what else can we see? Of course, that euro. I don't really look at commodities that much. I do have it in my market overview. I like to have a market overview chart set up. So I look at the dollar index. I always make sure this is gonna fall in line nicely, reverse with the euro USD. So we see that double top on the US dollar index. We know that we know that it's gonna play down a little bit. I compare that with our DJI. I like to have the Dow Jones up. One thing that I know, you look for these correlations, and you start seeing these movements where if I see something strong like this, and I see something strong like this, obviously they're replicated here, and then some sentiment comes out. I know what the direction is going to look like, right? And it's just there's kind of guesswork at that point as well, but you do have confirmations. Anyways, let's go into what else we got. OPEC. We got OPEC meeting. So we got the huge oil guys meeting in Vienna. When is it? I think it was on Thursday. Yeah, there we go. Thursday, all day, Vienna. They're gonna get together. 40% of the world's oil is traded with OPEC. So or produced with OPEC countries. So you want to keep an eye on these meetings, on their press releases, especially if you're a commodities trader. Uh, Metals. What else? What else we got? FOMC, of course. That happens every month. So we got the non-farm payroll here. And that's about it. We got our NFP, we got our FOMC, OPEC, and yeah, keep an eye out for those things. But I'll be going over as much news as possible for the week. And sorry for rambling on today. It's been a long session, almost an hour long. I'm gonna wrap it up now. Make sure that you follow our Telegram channel. The Telegram channel we have a Cyber Monday deal going on. So make sure to look into that. And let me turn that off. Let's check the chats. All right, hey Jared, how are you? Good morning, and hope you enjoyed your Thanksgiving holiday. Hope you enjoyed your Thanksgiving holiday as well. Sorry I talked so much, guys. It's been an hour. I kept you on the line too long. I'm gonna sign off, and I'll see you tomorrow morning at 11 a.m. I appreciate you sticking through this with me, and I'll make sure to increase the quality of these sessions. However, I'm here for a short time, just a week. RP's back next Monday, but let's make the most of it, and happy trading, my friends. All right, take care.